The banking industry is currently facing a tough time following the COVID-19 pandemic, which had curbed the people's appetites for loans. Senior banking and payment analyst at Global Data said that new loan applications will see a drop as consumers become more cautious about taking additional liabilities due to economic uncertainties. In July, talks on the extension of loan moratorium grew in intensity. Given the fact that the moratorium is going to end in September 30, the growing anxiety is already palpable among the people. With the increasing unemployment rate and expected recession, consumers' ability to pay back their loans has yet to stabilize. Based on a survey by agency Counseling Dan Pengurusan Kredit (AKPK), a financial consultation agency by BNM, a total of 88% respondents have signed up for the moratorium. The survey also recorded 35% increase of financial stress among working adults during the movement control order. While the consumers are feeling the pinch of the pandemic, concerns are mounting for banks who took the moratorium route. If consumers remain ill-equipped to pay once they have to start paying again, there will be a predictably higher rate of non-performing loans, or the NPL. NPL is defined as loans overdue for more than 90 days. Malaysia's NPL is observed to show an optimistic finding as the numbers continue to decline in 2020. In May 2020, the country's NPL was reported at $6.4 billion. This records a decrease from the previous number of $6.465 billion for April 2020. Having said so, BNM Deputy Governor Jessica Chew stated that the non-performing loans are expected to rise as there will be businesses that will continue to face difficulties. Besides that, while the moratorium does not really affect the profitability of a bank, it may impact their cash flow. Malaysia Building Society Berhad (MBSB) reported a first quarter net loss of 73.25 million owing to higher provisions for potential loan losses. It is the first local banking group to report a quarterly loss since the COVID-19 onslaught. A loan loss provision is an expense set aside as an allowance for uncollected loans and loan payments to cover a number of factors associated with potential loan losses. In 2017, Malaysia's loan loss provisions was reported at 2018.800 million. This records a decrease from the previous number of 2,687.300 million ringgit in 2016. However, with the reported increase in MBSB, will other banks share a similar fate? The CEO of Maybank, Abdul Farid Alia, stated that the bank does not favour extension of the moratorium. He implied that the 6-month period is good enough to come up with a plan on how to finance their respective loans post-moratorium. Meanwhile, AmBank appeared to be more lenient by offering targeted extension. In a virtual press conference on its annual results for the financial year ended March 31, 2020, its CEO, Sulaiman Muhammad Tahir, explained that they have set a criteria in terms of people who are in need and the approach is more towards requests by the customers. Ahmad Zaini Othman, CEO of Malaysia Building Society that owns MBSB Bank Berhad, emphasized that the bank is geared up for the collection phase and is not looking to extend the loan moratorium. Similarly, SME Bank does not hint on an extension, but emphasize on new financing support initiative to help the SMEs. Uncertainty continues to persist as the deadline for the moratorium is fast approaching. Although there were multiple calls to extend the moratorium, the Ministry of Finance has yet to give a solid stance on the matter. Tengku Datuk Sri Zafrul Tengku Abdul Aziz recently said that the government is still in discussions and have not reached a final decision.